Good morning, good afternoon, good evening, traders from across the globe, and welcome to video number 893. Welcome, traders, welcome. My name is Oscar Carboni. Traders, let's get right into this. We know futures trading is risky. We know it can cause substantial financial loss, and we know futures trading is not suitable for all trading accounts. High risk in this game, but let's move right along. Last night, we put out a video, and in that video, we did the little joke or the little song. One of these things is not like the other. One of these things just doesn't belong. And that was the Nasdaq chart. It was way below where it should have been when you compared it to S&P, Russell, when you compared it to the DAX, when you compared it to the transportation average. So I said, certainly we're buying Nasdaq for Monday, expecting Nasdaq to go higher. And that is what happened on Monday. Here we are Monday night. This is video number 893. We are looking at the markets early Monday night for trading Monday through Tuesday, or I should say really for trading Monday late night through Tuesday's trading session. That would be July 17th, 2012. So this video is for what should happen on Tuesday. All right, traders. We are not 100% sure which way we will be trading come the end of tomorrow, but for now we're getting early warning signals that the two-day rally has fizzled out and we are already back to selling the rally mode. We are in a do or die level. Remember, it is right now early Monday evening. I want to get this out just in case this is what happens. Now, we have not made a 100% determination on which direction we will be going in by the end of the day on Tuesday. But for now, we have indications that we should be selling the rallies, and here are some of the reasons why. Here is your Russell, traders, Russell 2000. Had a nice day, but then ran into resistance right here and just stopped cold at the resistance line. This line basically connects all the previous highs that we've seen lately in the Russell 2000. And you can see that we ran into trouble right at that line and started to back off via the settlement on Monday. So we are in a do or die level here in the Russell 2000. And if you look at some technical indicators, you will clearly see that the technical indicators are pointing straight down one day and it turns around. So Monday was right. We were bullish. It rallied. We got long and it worked. But Monday night for Tuesday, it's already beginning to point straight back down, OMNI. So that's what we're getting. Early warning signals that this market has already run out of steam and will need to sell the rallies in the Nasdaq, S&P this evening. Let's take another look. So far, you've looked at the Russell. Let's go right into the Nasdaq. Here we are, traders, with the Nasdaq. This is Monday's rally. It rallied nicely, but here we are running into our do or die resistance level right here. Big resistance level. If the market fails at this level, it will turn and head right back down. So a bit iffy on whether or not we are going to continue to move higher. In fact, for now, for the early part of Monday evening into Tuesday's trading, we're going to sell the rallies and see how that holds up. If, in fact, it stops us out, then we will go and buy the dip. For now, however, on record, we will be selling the rallies to begin the trading session Monday night into Tuesday. And once again, looking at the Nasdaq, you have your do or die level. And if you look at your technical indicators, they're not lovely right now. You have one pointing up, but it's already beginning to wiggle back down. You see that little wiggle right here? So it's not pointing straight up by any means. And, of course, we have other indicators, which I want to show you. The second indicator clearly pointing straight down. I can go through a lot of indicators, and just about all of them have already turned south after a one-day rally. Really a two-day rally, I should say. We're already starting to look ugly in these markets. Let's go pull another chart. Okay, traders, the Dow Jones Transportation Average. This was Monday. It rallied. But look, it hit that red resistance line right here and failed and came all the way back down towards its lows. Remember, we're talking about the Transportation Average, deemed the leader of U.S. indices. Rallied up, hit that resistance, and dropped towards its lows and settled that way on Monday afternoon. That tells me be cautious. These other charts I've shown you gives me reason to really be cautious. So you've seen the Russell, you've seen the Nasdaq, and the tranny. Let's look at a few more different charts now. Traders, the 30-year bonds right now in one of our infamous F flags, and holding inside of that F flag testing the bottom end of the F flag this evening, but so far, so good, holding inside the F flag. No reason to really think bonds are going to stop going up for now. They may come off for a day or two, but the bonds are bullish, and bullish bonds simply means the money pours out of stocks and into the bond market. Just makes it harder for the stock market to go higher. Can bonds and stocks go up together? Absolutely. Will they? Not in this climate, because the Fed is buying bonds, and it's much more secure to have your money in bonds right now than it is to be in stocks. If the bonds move higher, the market will continue to buy bonds. So it's one of the small reasons why the Nasdaq and the tranny and the Russell have difficulty rallying. Now let's go look at the dollar index. Traders, in the dollar index, we could be very easily looking at the 2-day rule. Remember now, it's only Monday evening and we have more analysis to do, but I wanted to bring you my preliminary analysis because it's already starting to show that if we cannot get past these do or die areas, the market does break down. So here we are in the dollar index. It's had one big down day, a second big down day after a series of rallies in a bull market. Down day one, down day two. Usually in the third day, we look for the market to come down a little, turn around, and head right back up, giving us the 2-day rule. So day 3 should look like a day that starts out lower and rallies itself. That's what we expect to be day 3 of the 2-day rule, if in fact that is what's going to happen. One big day down, second big day down in a bull market generally constitutes a buy. Maybe, just maybe, we have the 2-day rule here in the dollar index, and that would halt the rally that you've seen in the indices if, in fact, the dollar stops here and starts to move higher. So we've looked at Russell, Nasdaq, tranny, the bonds, and the dollar index. Traders, that paints a pretty clear picture of this. The do or die level in the Nasdaq. If we can get above this blue line, then we will revert back to buying the dips. Until we get above this blue line and hold for the day, just like I showed you in the tranny and in the Russell, we will be selling the rallies until we can get above this line and hold above. Traders, thank you so much for coming to my class. I hope this class will help to keep you in tune with what may happen this evening, Monday evening for Tuesday. If the analysis changes before we start rolling into Tuesday, I will do another video for you. For now, this is how we will approach the markets Monday night trading through Tuesday, unless you hear something else from me. Thank you once again for tuning into my videos, and come on down to livewithoscar.com. Jump into my free trading rooms and allow me to teach you how to view the charts the way the old pros on the trading floor have taught me over the past 30 years. Remember this at all times, traders. Stops are in. Emotions are out. Yeah. Watch for the 2-day rule in the dollar index. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.